Good.
Okay, so we are having a review of basic strategy approaches that we might be wanting to look at in the Wealth Lab. Nothing uh, what final, but just thoughts in terms of what we may not do. So I'm just making down some points here in terms of what we could do. So one was index-based trading. So we're looking at long and short so direction. Then we'll put time frames, and then analysis. Right, and if there's anything else, then we can look at. Okay, so it could be. I'll put 2 there. So I've made a very clear distinction between index-based trading and index-based investing, right? So both the long and short. Okay, who's got the background noise?
Madhu, I think there's some background noise with you.
Okay, I just muted it. Okay. So hours, days, and this would be, I don't know, for me it's months and years. I don't think years, but okay, let's put weeks and months. Right, and while I'm putting this, just share any thoughts you have, you can maybe capture it. Right. Analysis will basically technical plus events. Right. This will be fundamental and fundamental events themes also maybe. Right. If there is something else, then I've just kept one more column maybe for remarks. We can add that. So that is one. Then TMIT based portfolio. All right. So this can be basically long only, but actually, you know, since we don't have, okay, wait, I'll come to that. This can again, I think this is weeks and months, and TA, FA, sentiment, what? Things like politics, themes, whatever we may want to add to this. So let me just make this blue. All right. Yeah, how do I put this? Insert. Okay. Setting. All right. And then what did we have? What was after this?
The settle, what is that? Multi-month breakouts, multi-year breakouts.
Multi-year breakouts. So this is obviously.
You also added high quality patterns.
Huh? Yeah.
You also added high quality patterns.
Let me put high probability. Okay, high quality setups because it means so many things. So this is definitely weeks. Okay, fine. It can be anything. We're just looking at the breakout opportunity, just 2-3 days, or we could hold for months sometimes. It will just keep rallying and rallying and rallying. sorry, what am I saying? It should be here. This will be long mostly. Right. Long. The thing I wanted was this direction, time frames.
You need the instrument.
Yeah, that's why something was missing. Where is, how do I insert?
Insert column.
Where is insert column?
You select the whole column and
Start. So this will be FNO. This is ETFs. Okay, so by the way, since you're using, okay, good, we're doing this actually. Since you're doing things with IB, I hope some of us know that you can always, the IB has a tool to create your own sort of private ETF. So let's say you are long on oil and gas, and you could build your own set of, say, 4 stocks of oil and gas with weightages, and say 30% HPCL, 30% BPCL, 20% ONGC, 20% Oil India Limited. And every time, let's say you say, I want to buy 20,000 rupees worth of the ETF, then it will just go buy all those 4 and calculate automatically how many you need to buy. Right? So when I say, let me put IB ETFs here. I hope I remember that concept. And right, it could also be FNO. This trading will only be FNO, right? So, and spot. If you want to just do something in the spot and buy only delivery, let me know. Okay. Yeah, okay, fine. This is spot. All right, so this is where I was hesitating in terms of all these things in terms of TMIT portfolio. You could also, no, there's no, so TMIT talks a lot about, overpriced stuff and all. So you're going, selling and or even shorting the market. So I will say spot and shorting index, no, long, okay, long and short. Then short index, and also short stock. So this means by default that's only FNO stocks that we can do some things like this on, unlike the US markets where every stock is also shortable, or you can borrow to short. And also, since that's not really an active market in India, we are stuck with that thing, right? Anyhow, and then Balki had said something about mid cap, large cap, but you want to expand on that, Balki? Any thoughts?
Yeah, that's same thing what I said, as small cap, mid cap, large cap, multi-week, multi-month based on FA. I'm just trying to find out whether it's already there.
So when you say that, I mean, how is this? How do you want to put it as a distinctly separate strategy? Is my question.
Yeah, that's what I was trying to find out. It's more, yeah, it's more not thematic. It is more long only.
No,
based on more.
No, it's not. Thematic is not there. I just had a thought. I put it. I'll explain later. Go ahead.
This is, see, in your list there is no spot long based on TA only, because I am assuming when you say TMI based portfolio, it's more based on value, right?
Yeah, okay. Extreme values.
Yeah. And what is that short index there?
So it's like so the thing about TMIT, I think, okay, good why we're having this is because I think we keep thinking about TMIT only from the perspective of, buying stocks on the long side and holding on to it for many months, perhaps even years. But TMIT does not say that that's the only way. TMIT also, Harvard Marks keeps referring to when it was an excellent time when they sold or shorted the market because it was extremely overvalued. Right? So when you're saying value investing, I think this is a subtle and an important and critical insight. In terms of value investing, I think for almost all people, and I'm realizing this as I speak, is by default only buying low stocks. And that's also we discussed in some of the TMIT, finding the ones which are like ignored and this, that, and not. But TMIT also says, but not that vociferously, that you can also find stocks which are extremely overvalued and sell those off or short them. So I think I put that in the remarks. Mostly long portfolio, but also short very expensive stocks or whatever it is. So this is what I'm referring to, essentially. Right. Yeah. So for us, I think for a lot of us, it requires an adjustment of our thinking process. Right. So yeah, thematic. I'm basically referring to Bobby's approach. Right. So there's a lot of what would we say? Niche, not niche. It's like identifying trends. I hope all of you saw that that excellent article that Madhu put up about the talk given by outgoing chairman of Cisco. Did you read that?
Yeah.
Right, about,
yes.
40% of those companies.
Only 3 companies out of 10 will be.
Yeah, and 40 will not be existing in 10 years. What a thing to give. So I hope it was not just one doomsday scenario for the sake of saying it because he was retiring after 20 years. But, well, a lot of it, what is there in that article makes a hell of a lot of sense. And while this, and there's also, by the way, just to add, there's also a post he put up about how bank accounts may not be required in the future. One startup, I don't know if it came late in the night. Have a look at it. How bank accounts themselves might not be required. Right? So all these things could really, they are like completely, and like John Chambers said in the Cisco thing, either you disrupt or get disrupted. Right? It's a very fundamentally different way of looking at things. So I think this thematic thing, I don't know. Yeah, so identifying trends, I think disruptive, I don't know, what do you say? Disruptive technology is not it's not so much technology, disruptive thought, all right, and companies, and then deep analysis. In remarks, I just put will probably hit many dead ends and do and need to do primary analysis. So that means we haven't found data anywhere else and we'll have to do it on our own. But will probably be perhaps the most interesting and insightful. Right. So that is something to think about, thematic approaches. And then
so when you say Bobby's approach there, you mean the policy based?
It could be anything. It could be, let me add that. So analysis of these are like multi-year, I think. Okay, multi-year disruptive thought in companies, deep analysis, not events, policies, current affairs. I think it's something like that.
Hello.
Hey, Madhu.
Hello. Hi. I just wanted to confirm how is my voice clarity now? I'm testing on my mobile.
Yeah, okay, that's
Good.
quite good actually.
Okay, good. Okay. I'll have to leave now. I'm boarding the flight now. Okay,
Okay,
bye.
sure. Have a good flight.
I'll probably join tomorrow morning.
Okay, from Dubai or Kigali?
Okay. From Kigali.
Okay.
Okay.
Let's see. We'll get an internet connection there.
Okay, bye.
Okay, bye.
Bye.
All right. Sorry. All right. So I think we've talked about Stack 4. I think Stack 4 like inputs. I'm just giving an idea. And I think for this, business specific or industry specific research, right? Not company specific, but mostly industry specific. In the Stack 4 and Political and Economic Weekly. I've mentioned that magazine. Just have a look in case you've not had a look at it. Right. Yeah. So that is thematic, and then specifically, I think since we're recognizing value more and more, I'm just putting this down as a separate uh, um, what do you say approach, but not separate in terms of uh, okay. It's separate in terms of a thought process itself, right? It's not what I wanted. One sec, sorry. Right. And this was Bobby's suggestion, by the way. Turnaround stories, right? Or just turnarounds. These are like, which is actually, if you think about it, turnarounds are, in a sense, an overlap of the MIT-based things, value investing, right? Let's put deep value. In chapter 12 of TMIT, he talks very clearly about catching a falling knife. You remember the conversation we had? That is what we do, and that was a very radical thought. And he goes on to say that if we wait for the dust to settle and all the trouble to go, then the price has already gone up. And that's not really the business that we are in. We're looking for deep value, and we have the, intestinal fortitude and the patience to wait, given the conviction with which we do our things. So if we take that one step further in terms of companies doing a turnaround, then when they do a turnaround and they go from, when I say turnaround, it's specifically a few things. One is, say, negative EPS to positive EPS. So you're doing even minus 1 rupee EPS and you become even plus 1 paisa EPS, and companies start to, start getting attention there. So whether we want to, look at that, this would obviously be long only, right? Basically, and then the turnaround will mostly be spot, maybe FNO. I don't think we're going to find many stocks in the FNO list of which have really been beaten down. Will get removed from the FNO group for various reasons. So if you notice, by the way, additions and deletions to the FNO list, it generally coincides with the health of the company. So when companies start failing, their market cap starts falling and all that, they are removed. Interest falls, and just taking that to something else you were talking about, maybe that's one indication of stocks to actually track into the future. When the turnaround happens or deep value happens, then you've got a really potential multiplier there. Right? Okay. Yeah, I think this is what I have. Anybody has any want to add something?
Yeah, what I was telling was, multi-week, multi-month. I was thinking more on long only, multi-week, multi-month, because that stock, which is not there in your list. I'm still trying to find out what should be the name of the approach.
No, but so how is that different from, let's say, finding what is this, multi-year or multi-month breakouts? You want to add that here, multi-year and multi-month breakout separately?
It's not purely based on breakout. It is definitely based on some specific, more based on technical setups, but may not be just breakouts.
Okay.
Like good support, you're holding the support, like what happened yesterday, for example. A lot of stocks have bounced from some support level.
So let's say are you talking about, let's say, buying a lot of would it be fair to say you're looking at secondary trends? Secondary and potential turning points of secondary trends.
Yes.
I mean, if you're looking from where...
But it can be short also. I'm trying to find out. I'm trying to...
Yeah, sure. I mean, a secondary trend which is, in a bearish market, bounce is a secondary trend. I mean, a correction.
Right.
A rally would be that. So it's both short and long.
Yeah. Yes.
You want me to put that?
Yeah, let's put it that way, then we'll see.
Okay. Secondary trend reversals. Would that be fair enough? Balki? So analysis is...
okay, leave it at that, then we'll see.
Mostly.
Long and short stocks.
Yeah.
Technical, yes.
Right. So this would be, so basically FNO, right?
No, spot also. Can be spot also.
Okay.
Short and spot.
All right. All right. And your time frame you're looking at?
Weeks and months.
Weeks and months. All right. How do I get this back here? All right.
Of course, there are multiple other approaches, but I don't know. I think we are not listing it here. Listing here all sorts of approaches.
No, I think the point of
purely option listing.
Yeah, no, the point of this discussion, I think, is basically to, like we said this yesterday, to come to some sort of focus.
All types of approaches.
Sorry?
At the broad level.
Yeah, to come to some sort of a focus on, what we want to just stay on. Otherwise, there's so many distractions, as we now know, and we just, and this is what we want to maybe pursue in the Wealth Lab, and whatever we need to do for these things is what we want to focus on.
Yeah, the other one is pure option writing approach.
Okay, I think if you're talking about just option writing, then you have to put that as a separate thing. Where do we put it? I just want this to be sort of grouped properly. Okay. Option writing. So this is short options basically, right?
Yes. Yes.
So I would say I'm putting the same thing under direction and instrument. Okay. Because it could be long, short on the market, and then all those crazy different conversations. So you're writing our option writing. You're talking about what time frames? 1 to 2 weeks, or it could even be at the beginning of the month. Why not? No.
Yes, it can be it can be weeks. It can be weeks, multiple weeks if you want to write for multiple.
Yeah, it can be definitely. So what's your analysis basically you're looking at?
I think it's equal of FA and TA. Some event is going to happen, so market won't move, or you look at the pattern. So it can be both TA and FA or event. It's more, I think, would call it as TA and events.
Yeah, and events. Okay. Mid-month. And, okay, I guess. Okay, fine. We'll leave it. All right. Anyone wants to add anything else? That's it. So
Yeah.
we've got 1, 2, 3, 4, 5, 6, 7, 8 distinct approaches. That's quite a lot. Of course, the analysis will overlap. And I think one important thing that Sid mentioned yesterday was about, each of this will require their own specific analysis and following up of data and all. So we'll have to work on making a checklist for each one of this if we want to, uh, have a clear cut guideline about how we want to do each of this. Of course, all of us will probably not do all 8, and I'm sure if we keep writing, like I said, there'll be many more. But we need to get down to some focus and say, okay, these are distinctly different, and then you decide how you want to go about it. Right? And one of the things will be, since coming back to the whole idea of portfolio construction, how much of your capital you want to allocate to each of this. So these are like personal issues and practical issues. So if you have, let's say, only 20 lakhs of capital, there's no way you can put 2 lakhs for each of this. It's not going to work. You're going to have to, let's say, I would say not more than, if it's 20 lakh capital, you can't have more than 4 strategies. 5 lakhs each. I just, broadly saying that. And then the practical question you have to ask is it even worth that? Because for those 4 different strategies, not necessarily 4 distinctly different approaches, but definitely 4 different lines of thought. And then you have to ask then you will start asking yourself, is this really worth it? Should I just take 2 strategies, 2 10 lakh portfolios and be done with it? It becomes a different thing if you're doing, say, 20 crores or 2 crores. And then, so things to think about, right?
Yeah, I think for a person will not be able to track more than 3 or 4. I would say 3, maximum 3, or maybe maximum 4 of these strategies only.
Yeah. So questions I think that will come up are what sort of effort, in time, energy, and resources will be required for each. What is the expected reward and associated risk? Each. Then what is the capital one has and will allocate to each approach. Any other practical thoughts?
Yeah, when you, one question, when you said portfolio, when we say portfolio, generally we refer to something you hold for a long term, right? Like, few weeks, few months or years. You don't do look at whatever you are trading for 3-4 days. You don't call that as a portfolio, right?
See, I think the word portfolio is a very broad term. And let's say you're a day trader and you're saying I'm going to put a substantial amount of money to day trading, and I have a very clear disciplined approach to that, then I don't see anything wrong in calling that see, first of all, for me, portfolio has two things. One, a clear set of a very deep level of clarity in exactly what sort of opportunities you're looking for, and second, the discipline to implement that. So there's nothing in my understanding. You could have a day trading portfolio. That's fine with me. I mean, you're going to be focused on investing in in day trades. It could even just be 5-10 minutes. It could be events. You've got 10 lakhs. You've got clear understanding and rules for stop losses, for how much profit you can expect to make. If a day trader is saying I expect the stock to move 10%, then he doesn't know what he's talking about. But if a day trader says, yes, I don't think I can expect more than 2, 3, 5% if I'm lucky, and there are these sort of events which can give 2, 3, 4, 5%, and I will leverage and do either margin or FNO, and therefore on my position I'll make 5% because of leverage, then he knows what he's talking about. And I've set a stop loss of not more than, let's say, 5 or 8 or 10,000 rupees on any one trade, and I have, like, say, maybe 5 lakhs on it. And therefore I could do, I would need to do 50 wrong trades to lose all my money. Now, if you've done 10 wrong trades in a day trade and you haven't made money, there's something wrong with you. So if you've got things very clearly, quantified and delineated, then for me that's a portfolio. Any other thoughts? So anything which is clearly with one is a clear strategy. Yeah. And 2, discipline to implement it in all circumstances. All right, so I think that makes sense.
Yeah. Portfolio is what you are holding. Portfolio construction is a strategy, right?
Portfolio construction is not a strategy. I don't think it's a strategy. I mean, okay, portfolio.
When you refer to portfolio, you are referring to what you are holding.
Okay, fine. Can't disagree actually. The thing is, see, what you're holding right now, whatever we are holding right now, all of us, including me, I think is mostly unstructured. It's just bought something here, bought something there, read something here, read something there, bought it. But there's no overall global theme or philosophy behind it. And if we're going to be, serious about it, then we have to put that in place. Make sense?
Yeah, no, that's correct. What I was saying is, portfolio, when you say somebody says portfolio, they refer to what they are holding.
Yeah.
Portfolio, how do you select stocks or how do you construct your portfolio is basically your strategy.
Yeah, sure. Okay. All right. Anything else? Srinivas, Sid, want to add anything?
I think, as Balki also said, I think a lot of strategies we are listing.
So probably we have to understand each and every individual thing, how we can able to align some of these things, or yeah, whatever is possible.
Otherwise,
So I think
just be going all over the place.
Yeah. I think in my view, I think probably what I can see is that I think we can have some strategies for short term, at least 1 or 2 or whatever, and then some strategies for long term. Okay.
Yeah. So I don't know. Maybe I should have put this on an Excel sheet, then you could have filtered it that way. So when you say hours, time frames, you can say I want something for hours and days, then you'll have to look at, how you want to have it essentially.
Yeah. So I'm not sure. Probably we can't have a only short term or a only long term kind of thing, but we have to have that combination of.
No, it depends. I think on what one is looking for. If you're looking for like a regular monthly cash or weekly cash or something, then it has to be short term. If it is basically all long term stuff, I don't mind holding my stuff. I don't need to liquidate it for 3, 4, 5 years, 10 years. Then it's a whole different approach. So if you look at a lot of your personal requirements, I think, then only it will work to find out what works for you.
Yeah, that way I think if you ask me, I think probably I'll be interested in both short term as well as long term.
Yeah.
So,
right. So then you have to.
But how much of the allocate?
Then you have to pick. Yeah. So then you have to choose and pick and say, okay, fine, my short term, this is my approach, and this is the capital and risk I'm taking, and this is the sort of time, effort, and resources that will be required. And then for my long term, this is my, this thing. And each one may have maybe more than one approach. I mean, at least you have to have one for each. What works for short term will not work for long term, obviously. Another way around.
Yeah.
So you'll have to have 2 distinct approaches for different goals. And within that, we want to then say, okay, fine, I'll have 2, 3 strategies for long term and maybe 2 for short term. So you don't want to basically get into having too many strategies. Have a few, be very clear about it, set up your whole environment, circumstance analysis to deliver on what you need for that, and just once it's set, just keep running it.
Yeah. And also probably, I don't know how it matters. So probably other people might have very familiar with F&O and all options and all. So probably if I want to do anything from an option point of view, may or may not work for me at this point of time. So what works for me specifically out of these strategies, if I'm specifically looking for any short-term things?
Yeah, I think approaches and belief systems and what you trust and what you don't trust. I don't think anybody is here in this group, but there could be somebody who just says, technical is nonsense. So I can't use anything which has a technical approach to it. Somebody else may say, fundamental is too tough. Forget about it. I'll just do technicals only, and therefore I will rule out anything which has fundamental inputs.
No, what I'm saying is that, see, even though I like the technicals, so even though I want to do a short-term thing, but there may be a lot of things in the options which we can do. But at this point of time, I do not have any idea or knowledge on the options until unless I complete that kind of course. So I may not be able to get into that. So until that time, in the short term, what I can do. So those kind of that my knowledge limitations also will come as, I mean, maybe that is a shorter point of time. So at this point of time, if I have to choose, so what it suits to me out of these things, that probably.
Yeah. So the thing is, definitely as we go forward, our as we learn more things, we will do. We'll want to maybe then use new knowledge and say, okay, let's now change my strategy. So that's definitely there. I mean, just to connect this to yesterday's discussion or Wealth Lab, who knows, why not global investing, why not global trading? So yesterday, for the first time, I sort of logged into my IB account. So what is default enabled free is data on US futures, index futures. And there are lots of indices there that you can, trade. And there are a lot of ETFs on that which you can trade. Now, suddenly, you start thinking, oh, okay, why not do this? So, for example, this thematic thing which is there, right? In India, to build a thematic portfolio, you'll have to do it on your own. And either you and I sit and finding out that stocks and an individual orders and manage that sort of sub portfolio, and all the pain that comes with managing the nuts and bolts. Or you can use something like an IB platform and say, okay, these are my stocks in this theme, and these are my capital allocation, this is my percentage weightages, and you just say, let's say, buy this, like I gave that example of saying, buy an oil and gas ETF. You just click that, it's already identified, it's already parameterized, and it will do the rest. So like that, abroad, you get many ETFs for very, very niche themes. I'm sure there'll be many ETFs in the US for companies which are into fracking for oil, and there'll be something which is only on green energy, and that too there'll be something only on solar, or or there'll be a basket of solar, wind, and some renewable energies. And okay, fine. Do I want to go down that road? So this is where the thematic thing comes in, and just giving an example, as we learn, or here's another thought, as we start to identify global trends or things that we are sure that will probably happen in the future, or there is evidence of that, then we might shift in all sorts of ways in terms of what sort of instruments we trade, where we trade, how we trade, time durations we trade, and with experience, that's the next thing. With experience, our understanding of ourselves, of the market, will change, and the strategies will also change along with that. So I don't think it's fixed, but it has to have clarity for the future that you're looking into, and as and when you're making a change, you have to have clarity as to why and how you're making the change.
So in that way, I think we broadly classified. So now the next point may be individual, understand that individual, how it can work for an individual. So for all of us. So then I think out of these, how many specific things will fit in general for everybody, or if something can fit into for everybody's thing, then I think we can put a lot of focus on that one. And yeah, that specific things, probably I think we may have to come up with.
Yeah, sure. If let's say.
But I think for that, I think probably, I don't know, one idea maybe, I think not everybody may be in Bangalore, but if we have a one day session, one day we can meet all of us and then try to understand that each individual things and come out which works for whom, and then which works for all of us, kind of things. Then I think we can elaborate these strategies or action items. I think probably we have to come up with the action items once we identify the strategy.
Yeah.
Which fits for.
If like everybody in mentorship group agrees on one or two, then we'll spend a lot of time in Wealth Lab on that one or two, right? Because then it's actionable for all.
Yeah.
That's the thing. Yeah. Okay. Anything else?
So
Sorry, go ahead.
Yeah, in that way, I think Musa, can we have some next one more discussion on this one probably in detail, understanding this individual things. So probably if Balki or me, myself, and then you, and then I don't know, Madhu also can able to make it in Bangalore someday. So that particular day we can able to meet all of us together, and then probably Sid can join online. I don't know if anybody
we'll do that.
probably join that day. Yeah. So that I think we can have a more detailed discussion, understanding that each and individual
we'll do that.
Thoughts, and then how we can align to these strategies, and out of it, how we can able to come up with that action item. So I think that makes more.
Yeah, we'll do that. Done. Balki, you were saying something?
Yeah, no, I was saying, I don't know whether you have written. So what markets you want to be in? What global markets? I think that is one factor. And within each market, it can be any of these strategies.
Yeah. So, I mean, if you want to add, then you can add asset class, in the heading. Apart from strategy, direction, instruments, all that, then you can say asset class is one more column. And say what asset class do you want to look at? I think for now, it's safe to say that we just focus on equities in India, right? And let's see. I think because as of now, there's only Madhu who's actively looking at investing abroad. I don't know about Sid. If Sid also said yesterday that for now he's focusing on India, but maybe a year down the line you start looking at US seriously, or when I start looking at US, or I don't know if Balki will look. I mean, we'll see. I think when that time comes, it's only been talked. Because the bottom line is this. I think I'll tell you how I define when the time comes. Which is clear action. And what I mean by clear action is you open an international trading account and you've got I would say a minimum of $10,000. So that's about 6.5 lakhs today to send out abroad and invest abroad. If it's anything less than that, then I think it's not worth the time and effort. You might as well just put that money in India. So when let's say, I think there's at least 4 or 5 of us who are serious about that, we've got an international account plus the $10,000 abroad, then let's talk seriously about global investing. Okay, it brings me to one more thing that I wanted to should I put that as a separate? Yeah, it is a separate thing. Okay, good. We are having this. Finally, putting all this down. I am just sort of. I think maybe Srinivas will not was not there, but others. I keep coming back to. You remember the discussions we had on Nikkei last year, or 1.5 years back, right? So let me just put that as a thing here, and I say instruments. I think I just stay with global indices, right? And this could be long and short, right? And this could be, I would say, days to weeks. I don't think at this point, at least I'm not keen on sitting in front of my computer day trading European indices or American indices. Definitely not interested. So suppose we find something like Nikkei and say, you know what, this thing is just going to move, and it has, I think, gone up 80% in the last 1 year, and I just want to get into Nikkei futures and just hold it. You'll find opportunities like that, right? So I think I would put that and look only at indices. Like
should be weeks to months rather than days to weeks.
Okay, I mean, days.
I would say no days, but anyway, get into that.
Okay. Right. Okay. From I don't know what 2002014. Just as a reminder. That's all. Yeah. I think that can be a. I mean, for me, this is something that I would, I think, consider in the short term. I mean, short term means in the next few weeks, if it's possible.
One more point I had was, which one of these approaches you are going to use? It will be based on one, of course, your what's your money, what your sum, what you call what the money you have for investment. It also depends upon what the return that you are looking at, the periodicity of the return. You get a monthly return. I think you mentioned that. So if you are looking at monthly return, then you should be using a different approach. If you are looking at only portfolio appreciation, then it can be a different approach.
Correct. So let's put that clearly down. Does one need monthly cash flows, long-term capital appreciation, both, and others, and whatever that others could be just, I don't know, bragging rights. I bought Nikkei futures. That's all. Maybe one lot, didn't make money, but bragging rights you have. I put this.
Bragging rights?
You're right to boast because you did something.
Oh, okay.
No, it's not for. You should be clear about it. The reason I put this down is while reading TMIT, one of the things I've become more and more clear about is paying attention to our human behavior, human weaknesses, needs, and all that. And I think sometimes we just want to, feel good about ourselves and sort of tell the world about it. And we tend to shy away from that. And I'm just saying that I have no judgment about making right, wrong decisions there. I'm just saying that I think it's important to respect that. And sometimes you just want to go and have fun, then go and do that. No problem. So just do one trade for fun and see how it goes. Anything else? What, Sid has gone?
This is offline.
I'm listening.
Okay. Didn't hear anything from you. That's what I was wondering. Okay. Anything to add on this? Anyone?
Nothing I can.
Okay. I would say.
I think what we need next is for each of these strategies now. What kind of analysis? Like, the analysis that we put here is just a very top level thing, saying we're going to do TA or FA or what.
Yeah.
So to take it now, what is the analysis that we're actually going to do? Because that would then tell us how much time and effort that goes into each of these strategies.
Sure. Agreed. So, I mean, broadly, I think, without getting into the details of each, just broadly, looking at, okay, let's put that down. Time and effort. So I think on this, want to start listing out anything? I think one will be regular chart reviews. Then it's really a question of how many charts, right? I think we'll all remember the experiment with the CNX 200 and how long that took, right? So just one of these could just occupy your whole time. So you've got to be really focused on how many charts, what's the basket to review. Right. Then there will be, I think, so that is technical. Then fundamental, I would say basically we are looking only at index valuations. So we are talking about Nifty and all those sector indices data that we can get from the NSE website, right? And histograms. Again, coming to global investing, a lot of extremely high quality data can be downloaded for free from Yahoo Finance and Google Finance for many indices and stocks in the US. Of course, there will be errors since it's free, but just to sound you out, right? In India, we have a big limitation on that. And then we have to ask about, okay, so that is index valuations, company specific data in India is hard to get unless we subscribe. And we all know the subscriptions are not cheap, so do we want to do that? So I think in line with this, we've got I will put this our research report from the various brokers. Okay. And I think that did a pretty, I think what we did with that last year on this, I was quite happy with that. I think it was quite nice in terms of the insight we got as to what is possible. And I really think it's useful doing that given our limitations as retail investors, right? Good quality primary research. Okay. Then I think we have after this what? Macro macros. So we can talk about GDP, inflation, global affairs, politics, etc. Right, and then I think there'll be industry. So reviews, industry specific. Right. I think for me, of course, each one has their own preferences. The one important thing is the approach is essentially top down, right? That. However, I think one thing to keep in mind is when I'm mentioning top down, things like turnarounds is I don't know whether it bottoms up. This thoughts. All right. This is what there is. I mean, I think if we start doing this, that itself is a huge issue. Right. So let me also, I think, put just fair to put resources in terms of. So a lot of it is, of course, already there on the net. So there's really nothing to say here. But what I wanted to, sort of bring forth is the following. Interactive brokers. And how many of you have looked at AMI Broker? Anyone?
What?
AMI Broker?
AMI Broker is more or less like the Metastock itself. There's really nothing different between them. The only thing is that AMI Broker has that AFL, which is definitely somewhat better than the formula editor that is there, but none of us are writing any kind of code as of now in.
Sure. Okay. Have you seen the details about AMI Broker being able to handle fundamental data?
No.
So that is something which I don't know might become important for that reason. Another small reason may not be that important because I think most of us are not doing this. Is AMI Broker now has floating multi-screen charts. Right. So if we are really serious about going down this thing, then you want to cut down as many constraints as possible, and you want to take away any limitations. So I was going to the AMI Broker website in detail last couple of days, and that's why I sort of am mentioning this here. Metastock is fine at this point, really no issue, but there are things that could be useful in our line of thinking that AMI Broker can do that Metastock cannot do. So just sounding people out. The only thing is, of course, it's an additional cost and all those things. Okay, so apart from that, okay, it's basically our, I think everything else we have, basically the web resources, and that's it.
At traders, what is that software you use?
Oh, it's Investor. Yeah.
Investor.
Yeah, forgot about that. All right. So that's one more thing in the Wealth Lab. So we want to get all this up and running and see how it falls in place essentially. Any other thoughts? No? Okay. So I mean, I'll have this, and I should have done this on GDocs actually. It would have been a shared document. Even if I send this out now, then we'll not be able to.
You can
Huh?
The PDF.
No.
you can actually copy this, paste it into GDocs right now. Open an Excel file and
Yeah, I'll do that. I'll do that after the session is over. So that you can add, comment, edit, whatever, or download it for yourself and make your own personalized copy. Yeah. Okay. Done. Anything else for now?
I'm trying to remember in the resources, is there anything else?
Basically what? We're talking about websites, newspapers. I probably must say that Mahadeshwar himself has become a resource, just posting all the really good news items.
yeah.
So I think I think the resources. This is something that we have really not exploited, and I want to emphasize this. Your own personal networks. Please start digging. I mean, I can't emphasize it enough as to how valuable this could be for you personally and definitely for the group, right? The people you know. Please dig. Right? They have access to amazing information, amazing insights. Only if it's like just trivia for them, but it's a gold mine for you. And I think we really need to get down into this. All right. Anything else?
So what is the follow-up things on this one, Musa? So when is the next?
We'll do that. I just want to close this first. Anything I want to add? Anyone on this? No? Okay. So I will put this up in the GDocs and send you links in the afternoon, hopefully. All right. Okay. So what I'm thinking is 2-3 things. I think we have 2 lines of approaches we can take going forward as far as Wealth Lab is concerned. Is we can spend time on what we've put up in this table here, and have, I think it won't take one, it'll take quite a few iterations, discussions, and going through each one in terms of detailing it and really figuring out time, effort, and trying maybe even a few. So it's like going back to where we were about 7-8 months back, like reading the research reports or getting that stuff from my CSA Direct about the tracker. Motilal also has one now, and doing that to get a sense of the actual time and effort. Otherwise, this is just talk, and then focusing on what we want to do. And I'm thinking that an approach like that could take quite a few weeks to sort of finally fall into place, and we all agree on a sort of common approach, and we leave also time and the space aside for what each individual might want to pursue. The other line of thought is we start Wealth Lab, and I'm thinking we start sometime next week, and we just do, I don't know, like I said, I'm also okay with full day sessions or at least half day sessions, and just do that, have the Investor open, have our charts open, get our newspapers, read the news, do current affairs, and just do that with a very unstructured, intentionally unstructured way for, let's say, a few weeks, and that will give us a sense of a pace or a theme or a way of doing things that we might find comfortable and what is practical and feasible, and then we pick up from there. What are your thoughts?
Did you say that we will use the Wealth Lab to elaborate on the strategies?
See, I mean, essentially, Wealth Lab is the practical side of mentorship, right? I mean, it's everything. So,
Yes.
yeah. So, Wealth Lab is where we want to do the real hard work, stop talking, start doing, and start identifying opportunities, and then even trade, make money, lose money, everything. So, the question is, how do we want to go about it? Do we want to go about it in a sort of freestyle manner, without a very strict set of this is what we will do and this is what we will not do, and get a feel for how it works, the rhythm, the timing, the infrastructure, the sort of resources we have, and that's one approach. You are open to serendipity, you're open to new ideas, you're open to different ways of doing things, and we're not slotting ourselves. The other one is we get into details of each of the strategies that we have on the screen and decide, okay, this is what we will do. The two very opposite approaches, in my opinion. So how would each of us like to take it? So if you can get a poll out, then we can take it forward. Let's hear your thoughts.
See, what I feel is, each of us have to decide on which of these approaches we would like to take, and then do at least first level elaboration of this approach. So see, I may not look at all the 8, I may look at only 3, and I will probably do first level elaboration of that approach. What to the extent possible? Somebody may be able to do it, somebody may not be able to do it, but then come for the discussion where we can have little more elaborate strategies. And I think you should parallelly start implementing the strategy, because I don't think there's anything like you complete your strategy and freeze it before you start implementing it.
True, I agree.
So what I'm saying is, before you go to the Wealth Lab, you should have at least first level elaboration of your strategy.
Okay.
Of course, and then discuss that in the Wealth Lab. Now, then it will not be Wealth Lab; it will be more review meeting.
Okay, fine. Sid, so I know you are not here, but would like to hear your thoughts. What would you do if you were here?
I have no idea how. Hello, can you hear me?
Yeah, go ahead.
Yeah, so it's pretty much what I had talked about long back itself, like in the sense that for me it would more be about writing up some of these things. Like, so if in my case I'm looking at doing 2 of these strategies, then it would be an issue of trying to come up with what I really will, like what is my analysis going to be, and then trying to detail that out into a document sort of a thing, and then post it onto the group, mentorship group, and get some feedback. I guess that's really the way that'll have to go for me.
Okay, fine.
Unless there are any weekend things when EQNS is not there, then I would be able to, like when I say weekend, it again has to be a Saturday and a Monday, Tuesday over there, I think. Not Monday, sorry, Sunday, Monday over there, because that's when I do something out here.
I think we can look at least some Mondays. Sundays will not be possible for me right now, but we can definitely look at some Sundays, Mondays where we could figure out what works for you and us and do some hands-on stuff where you are also there.
Yeah.
Yeah. Okay. Done. Srinivas, any thoughts?
No, for me, whatever you mentioned, I think start this Wealth Lab thing, and then if at all anything we can do straight away practical, we can do, or even we can discuss. But if we're having a regular interaction, if possible on daily basis, I think that will give me more comfort for me.
Okay, fine, done. Okay, so I think this is it for at least this part of the conversation. Can I close it here? Any final thoughts, comments?
No, I think this sheet is very good because it is given us some
All right.
very clear thoughts.
Done. Okay, fine. So I'll put this up on GDocs later, and I will share it. Like I said. Okay, done. Sid, Srinivas, any last comment?
No, nothing.
Okay, fine. I'll stop.
So what do we do on the TMIT next then?
Yeah, I'll just stop this recording here. One sec. Okay. Okay, so what I wanted to, my thing is, I think if each one of us can focus on this, right? Start with that. Don't start with the strategies. You know, start with this and be clear and define to the extent you can. Not that I'm expecting 100% clarity. Exactly what your circumstances, your capital, your need, and your future is. At least if you can think for the next, I think 1 or 2 years time frame, or if you're very short term, then maybe at least the next few months. And then I think it will give you a grounding of what is practical for you or not. And then you can, it will be more appropriate to select what strategy fits into that. Yeah.
Yeah.
All right. So maybe the next time we have this conversation, or the next set of conversations we have around this, we'll probably start with where is each person in terms of these parameters, and then what have they perhaps thought about which approach they want to take, and then it will become a far more practical approach. Right? Okay, done.
Yeah.
All right. So thank you.